Wrapping up today's show with the fifth thing. Again, we're moving to readers, subscriber questions. This one came in recently, an excellent question from a DKI subscriber. We're talking about hedging. Gary, how do you hedge when hedging gets more expensive? Thing number five, is it too late to invest in those inflation hedges, Gary, that you've been talking about for some time?
So, Rob, I think this is a great question. And the reason I like it so much is it pairs really well with a question that we got a couple weeks ago from a subscriber who, was worried about having market hedges, meaning shorting market indexes against our long positions. And one of the things that I explain to people is you need to view the whole portfolio together. And so I explained that our portfolio had multiple segments. We've got an energy segment, we have individual stocks, we have market hedges to protect against declines in the stock market, and we have inflation hedges to protect against further inflation. Now, those inflation hedges, besides energy, which has been a good inflation hedge, have been things like gold and silver, and of course, Bitcoin. And so the subscriber was saying, hey, wait a minute, we've got Bitcoin at all-time records, gold just off of all-time records. Are they too high? Can we still use them? And, the answer is, I have two answers. That one is you're putting together a whole portfolio. We try to arrange things such that losses in one area will be offset by gains in another area. But the most important thing here is, and Alex knows this as well, it's something he tried to explain to the Bank of England. The thing that is causing inflation is the monetization of congressional overspending. When the US Congress overspends by $2 or $3 trillion a year, then the Treasury Department has to issue bonds, and we basically create more money, and we have more money in the system chasing the same number of goods. And when that happens, you end up with higher prices. And so, my response to this really smart question is, as long as we have overspending and an increase, a constant and increasing rate of increase in the money supply, then I want to have inflation hedges in place. And they're getting expensive, but they're getting expensive for a reason. And that reason isn't about to change.
Gary, we've talked a lot about Doge with Elon and Vivek coming into the government. Does that change your positioning in terms of if they're able to essentially or effectively try and cut these certain government programs? Does that do anything to that interest expense? What's your position with them coming into the fold here with President-elect Trump taking office end of January?
I hope they're effective. I really do. I'm cheering for Elon, for Vivek, for Doge, and for the country. We need to cut spending, and it's urgent. And I think they're pointed in the right place, and they have great intentions, and they're both clearly really smart, well-meaning people. The problem is the U.S. government is an enormous leviathan, and it's very hard to cut spending. It's hard to cut entire departments. Remember, those departments were authorized by Congress. Their spending budgets were authorized by Congress. It's not clear to me that executive orders can simply wipe out spending that's been authorized by Congress. The other thing is that everybody is against wasteful spending except the wasteful spending in their own district. Remember, every single member of Capitol Hill has wasteful spending in their district. And so they don't want to go to their constituents and say, yeah, look, I voted to reduce funding for this or for that. And on top of all of that, the only way we're going to get meaningful spending cuts is if they cut the military budget and if they cut social services, things like Social Security, welfare, pensions, Medicare, Medicaid. I don't think this administration wants to do that. I don't think they want to try to do that. And anybody in American politics who tries to do that, good luck. It's not going to work. So I hope they're successful in cutting government spending. I'm just skeptical on how much is available to be cut.
Gary, in regards to Bitcoin, because I know that's one of the positions you talk about as an inflation hedge, Bitcoin is on a run up to $100,000. Is it too late to buy? Should we sell? What's the move with Bitcoin right now?
Well, so as of today, Bitcoin had a bad weekend, a bad day. It's now down to $93,000, a
Oh
relative
my gosh,
bargain. Right. Yeah.
trouble. You
It's
were
down.
wrong again, Gary.
Yeah. Right. Well, it's down to levels we haven't seen since last week. So it's, that's an old meme there. Um, look, I don't think it's ever too late to buy Bitcoin. Certainly it's been volatile, but the answer is that when it's volatile and goes down, that's when you buy more. We did a video last week saying you hold your Bitcoin. You do not sell your Bitcoin. If you want to buy a Lambo, you need to sell something else and use the money from that to buy your Lambo. We're every major government and central bank in the world right now is in full fiat Ponzi with just enormous amounts of spending, enormous amounts of printing. That's not going to change. And so, I think Bitcoin, with its maximum issuance of 21 million coins, of which almost 20 million have been issued, that's it. I think that's the place to be. And so, listen, if you bought it today at 93,000, and I'm just making this up, if it drops by a third tomorrow and goes to 60,000, does it really matter? Not if you were going to hold it for years, right? Just hold it. And I can tell you, a couple years ago, Bitcoin was, I don't know, I want to say 64,000. It dropped right to around 15 or
Mhm.
so. I didn't sell any. I just bought more when it got down to around 20,000 and just increased the size of my position. And I think, one of the things that's great about the Bitcoin community is they are patient, they are diamond hands, and they're just willing to hold it. And so, no, I don't think it's too late. And, at 93,000, it's a bargain compared to where it was on Friday, but more expensive than where it was a week ago. Basically, I don't know the short-term move. I don't know if the next 10 or $20,000 in Bitcoin is going to be up or down. What I do know is if you want to hold it for the next 5 or 10 years, there's not a bad time to buy it.
Gary, there's so many other coins out there in the market, right? You get this cryptocurrency market, Dogecoin, not the government entity. You've got SHIB, a whole Toad coin, whatever else there may be. Are you buying anything else there as a hedge in inflation, or is it just Bitcoin?
Just Bitcoin. One of the things I think that the Bitcoin community has done that's very, very smart is they have separated Bitcoin and crypto. When people talk about crypto and they talk about Bitcoin, Bitcoiners will say, no, Bitcoin is not crypto. And in fairness to them, it is different. It is decentralized. All of those other coins that you talked about either have unlimited caps. Doge, they can just make more of it. It's sort of like the US government and the dollar. They can just print trillions more if they wanted to. Bitcoin, that's a 21 million hard cap. That's not going to be changed. Yeah, there is a method, but you would need to get everybody. You'd basically need to get more than 50% of Bitcoiners to vote against their own interests and authorize that. The probability of that happening is right around zero. I also think proof of work matters. And the reason is because it's expensive to create Bitcoin. It's stored energy, basically, and energy isn't free. Um, and so what that means is it's cheaper, and at times it's been cheaper to buy Bitcoin than to try to create Bitcoin and pass off fake Bitcoin. It becomes very difficult to game the system. I think that's really interesting, and the fact that it's decentralized means it can't be controlled by one person or somebody who can just change the rules. And we've seen that in other crypto projects. I know the Ethereum community will say, hey, we've got better use cases. There should be growth on that. And those are fair points. And ETH does have, some really impressive use cases and the ability to build on that. All that's terrific. The problem, in my opinion, with ETH is that it's proof of stake, not proof of work. It's easier to create and it is centralized. You have, a small number of people who can change the rules. This is a situation where I want to own Bitcoin for years and just hold it and not really concern myself with a whole bunch of other non-Bitcoin crypto. If I'm going to be investing in something else like that, my real talent and my real expertise is as a stock picker, and I'm going to find, the next stock that DKI subscribers can own that can double or triple or better. And, as we were talking about earlier in this episode, we've had a lot of examples of that. So that's really my focus.
Gary, one last question, and I think we got Alex that's going to add a few points here for the fifth thing. When you talked about implementing inflation hedges, you mentioned dollar cost averaging. What's dollar cost averaging? Why is that a good way to jump into the market, regardless of where the current price of an asset may be, in this case, Bitcoin?
Sure. So a lot of times people will say, I want to own a certain number of shares or a certain amount of Bitcoin or a certain dollar amount of something, and they just go buy it. Now, for people who are saying, well, I want to own Bitcoin, but I'm worried that the current level, whether it was 100,000 or the 93.5, which is where it was just before we started the show, um, they might say, well, I'm worried. I want to own it and be there if it goes up, but I'm worried that what if it goes down to 50,000 and then, I feel like a sucker and, then I've lost money. And so what dollar cost averaging is, let's imagine for a minute that what you can spare in your household budget is a certain amount of money per week or per month. Let's just say monthly, whether it's $100 a month or $500 a month or $1,000 a month, whatever works with your budget or your family's budget. What you would do is every month in this example, you would buy that same $100 or $1,000, whatever that number is, amount of Bitcoin. And the reason you do that is because when Bitcoin goes down or when the stock that you're looking at goes down, that $100 will buy more Bitcoin. It'll buy more sats. It'll buy more shares of the stock that you want. When it goes up, when the stock goes up or Bitcoin goes up, that $100 will buy a smaller number of sats or a smaller number of shares. And so with dollar cost averaging, it is a guarantee that you buy more when it goes down and you buy less when it goes up. And you're just buying over time. And so the math on it does work. It's not something that I typically do myself. Usually I've, picked investment exposure that I want and sometimes I'll scale into something, but typically I know what bet I want to make and I make that bet. But for people who aren't doing this all day, every day, or who are worried, I want to buy Bitcoin, but I'm worried that it's too high, dollar cost averaging across a year or two is a perfectly good way to make those investment allocation decisions. And the other thing is, if you do it automatically, it just comes out of your account and you don't have to think about it. And it's sort of this forced savings and this forced investing. And if you do that across a number of decades, you can end up with a lot of money in your account down the road. And that's not a bad way to invest either.
Alex, wanted to open it up to you for thing number five. Anything that you would add? Any insights from you?
Sure. I mean, I would just reiterate kind of what Gary said. I mean, Bitcoin and gold have had a great, well, gold has had a great run in the last year, and Bitcoin, well, in the last year, it's also had a great run. And we've seen kind of Bitcoin have a small pullback in the last few days. And then gold has also kind of tanked a little bit. So that kind of just really hammers home that point of dollar cost averaging. In terms of inflation hedges, I completely agree that they're getting even more important no matter how much more expensive they're becoming. And so as much as, I side with Gary on the, hoping Elon Musk and Vivek and whomever else part of Doge sort out kind of the US fiscal situation. Like Luke Roman makes a really good point, which is that the actual true interest expense, which he kind of calculates as um, entitlement spending, defense spending, and the real interest on the debt is already in excess of 111% of gross federal tax receipts. So kind of this like inflationary wave is probably not going to stop. And although there will be volatility, they are very important. And I would just highlight one extra thing. There's been a lot of talk recently about the strategic Bitcoin reserve. And I think everyone's been very excited about it because of, well, I think what it could mean for the price. But I read a great thread the other day by TXMC Trades on Twitter.
I
And
follow him.
he's fantastic.
Yeah.
And he showed that Bitcoin would essentially have to outgrow that. Even then, these are the CBO projections. These aren't even, and we know how off they are. It would have to grow, I think, 30% and growing in perpetuity And, as it becomes a larger asset class, that's going to be more difficult. So I think I'm not too bullish on the strategic Bitcoin reserve, but I think, yeah, Bitcoin and gold, they're very important no matter how expensive they get going forward.
I'm gonna add one thing to this. I just want our very sharp viewers to notice that the term Alex used was federal tax receipts. At Deep Knowledge Investing, we never talk about taxes as revenue. Revenue is a voluntary exchange for goods and services. Taxes are not voluntary, and you may not be receiving any goods or services or anything that you think has value. Yet again, Alex, we're very proud of you for understanding that tax receipts and revenue are not the same thing. When you are done embarrassing the Bank of England, we will send you to Washington, D.C., and you should have a chat with the Federal Reserve governors there.
Next on my hit list. Yeah.
Line them up. That concludes this week's version of the five things. Thank you, everybody, again for tuning in. This was the Nvidia calms the market issue. As you've seen just with our fifth thing, if you have any questions that you'd like to ask Gary or the DKI team, please don't hesitate to reach out. You can do that in one of two ways. You can head to the website, use the Ask Gary link in the navigation. That'll take you to a form. Super simple, easy to fill out, submit your question. You can always email us as well at ir@deepknowledgeinvesting.com. That'll wrap up this edition of the five things. Gary, I'll turn it over to you for any closing thoughts.
Well, it's Thanksgiving week, Rob, and I think it's a really important holiday. There's something wonderful about any holiday, whether it's a national one or a religious one, where we focus on gratitude. And so, today I just want to express gratitude to you, Rob, for filming this with me every week. Alex, you and Andrew do an incredible job as interns. And for our audience, I say this to you guys every week, but we know your time is valuable, and thank you so much for spending it with us. It's exciting and fun for us to do these videos for you and to think about what issues we want to highlight every week. And so we are all thankful for all of you. Thanks for watching, and we will see you in next week's video.
Thanks so much, everyone.
Okay.